saying.
Now, when it comes to fiscal stimulus, one area that most economists agree that probably doesn't need any help at all is the housing market, particularly Toronto and Vancouver. I actually have some economists on Bay Street now starting to question what the positions are of the three party leaders when it comes to tightening this mortgage market, to making moves. Mr. Flaherty, when he was in the job, was very proactive that way, and it doesn't seem that there's a lot happening. What would the NDP do? Would you move in and try to tighten this mortgage market?
I think that right now there is a serious danger. I think that some cities, the prices are too high. And I also know that young families can't get into that market. That's where we come in. We want to help create new affordable housing in our country. Look at a city like Vancouver. I mean, how can a young couple even live in the city where they're working? So that's not good for families, and it's not good for the economy. That's, again, a role that the federal government can play to be helpful. But right now what we've seen is what is there in terms of housing stock. The price is going way up. And you're right, it is a bit of a danger. There could be a bubble created there, and we could be in for a terrible surprise.
So if you're in for that terrible surprise and you become prime minister after October and you have your new finance minister at your side, do you start making moves? You got to take a look at because you're talking about building affordable housing, and that's great on one end of the spectrum. But if you're talking about an overheating of single family homes in Toronto, that could cause a bubble to burst. Wouldn't you have to take some hard action on the other end? And that would really be about limiting mortgage growth.
Well, again, you want to make sure that young families who are getting in for the first time actually have the ability to do that. With regard to the mortgage growth, it's being fed exactly as you said by the very low interest rates right now. And that's why we have to do our best to educate people that it's not going to be able to continue that way for forever.
There have been those who have been calling for the CMHC to be wound back or wound down. $900 million in insured mortgage, $1 billion in insured mortgage is an awful lot of money. And in the event there was a bubble that burst, that would be Canadian taxpayers on the hook. Why not just privatize the whole thing? Let Bay Street deal with it.
I don't think that that's a solution that would work. And not only that, Canada has an institution that served us well. And when something works, why get rid of it? I mean, the CMHC has done a really good job historically of protecting Canadians and their mortgages and investments. But at the same time, maybe there's a bit more that we could be doing with the CMHC. We were talking about affordable housing. That doesn't just mean social housing. That can mean coming up with the fiscal levers to allow the private sector to build more affordable housing in large urban areas like Toronto and Vancouver.
Such as what?
Well, I think that you could be giving people a hand if you have an incentive to allow people, for example, to realize some of their gain on an existing property. If they're going to use that specifically for the exact same thing but build more affordable rental housing, I think that's the type of incentive we could be looking at.
The CMHC right now under Evan Siddall trying to pair taxpayer exposure, at least bring it back a little bit, the insurance in force. Are you saying they're moving in the wrong direction then?
No, I think that the CMHC has been doing a fine job. That's why I think it's an institution that needs to be defended. But if anybody's talking about privatizing it, I'll disagree with that. I mean, there are things that are in the public interest that should belong to the public.